10%? If you lose 10%, are you pissed off? If you lose 50%, are you pissed off? So there are no two accounts that are the same. So when all these yahoos come on TV and everywhere else and give you advice, they're giving you advice on what one certain individual should do, when there's a million different advices for the same stock. Doesn't make any sense. You see this all the time on CNBC. Boom! Gab! You see somebody come out and say, I think Cisco's great. You can make 10% in it. Well, let's say you have $10,000. Are you going to put all $10,000 into one trade? No. If you have $10,000, what does $1,000 do for you in a year? Doesn't make any sense. Are you watching the stocks all day long for $1,000? No. That means that scenario for you is completely ridiculous. And it's wrong. It's dumb. And they don't acknowledge it. If you have $25,000 account and you say you're trying to make $100,000, nothing wrong with that. It just means your risk profile is higher, and it can be done with that type of risk profile if you get smart. But the biggest thing I stress, and I'm stressing it before we even start here, is the amount of people that lie to themselves, to their wives, to me, to everybody, is huge. And maybe you're not lying. Maybe you're just deceiving yourself. So I had a guy way back when tell me, I have $1 million. I'm just going to start with 50,000, then we'll put in another million and we'll trade and see how it works. So he did a trade. He put in $2,000, and it went to $1,000, and then he called me after hours. Sam, I lost $1,000. I said, you just told me you have $1 million. Your risk profile was you have no problem losing 10%. You want to make 30%, and you're calling after $1,000. Well, you know, I just didn't feel comfortable. I said, you're not for us. You're the wrong person. It doesn't make any sense, right? So maybe he was telling the truth, maybe he wasn't. But there's no way, if you have $1 million and you lose 1,000, you're all upset. Now, there's nothing wrong with being upset. But that means your risk profile is, if I have $1 million and I lose 5%, I'm pretty upset. That's okay. There's nothing wrong with that risk profile. The problem is, if you have that risk profile, you're not going to make 20% or 30% like he wanted. You have zero chance of making 30%. But be honest to yourself. Okay, fundamentals, we talked about this to start with. No two accounts are the same. So people ask all the time, say, Sam, did you do 50%? Are you 75% on your trades? Are you 50% on your trades? Well, that's a dumb question to start with. That's just absolutely stupid. Let's say you buy 850s on Amazon, just making up stuff. You buy them at 2. You sell them at 6, you buy the 865s at 2. You sell those, and you put 1 into the 870s, and you lose that 1. Did you hit 2 trades and miss 1? Or did you make $9,000 off the 2 and you lost 1,000? Just the question in itself makes no sense. Can you copy somebody else's trades? No. Are they right for you? No. You don't know. Every single thing has a second and third question. Okay, you have to know that. So no two accounts are the same. The account value. Somebody that has $1 million or $500,000 is different than somebody that's trading with a $20,000 account. What are your short-term goals? What do you want to achieve this week, next week, 3 weeks? Versus your long-term goals. I want to achieve this in a month, 2 months, 3 months, 6 months, a year, 2 years. Completely different. Your risk levels. And this is the key. Let's say you have $50,000 account and you do $200 trades, just making up stuff based on your profile. You put in 5 trades. You immediately say to yourself, they all go to 0, I lost $1,000. If that's not good for you, or that's not good enough for you, or you say, I don't want to do that, that's not good, I can't do it, then don't do it. Every single trade that we do, we expect them to go to 0. If you do that, then you trade differently. Your mentality is different. We have stories from the room where somebody bought a certain position at $1, took it to a nickel, sold it at a nickel, and they went to $20 the next day. Doesn't make any sense. And we'll talk a little bit about buying less as we go on here. How much time can you dedicate to training? Are you a doctor? We have doctors, we have plastic surgeons, we have everybody in the room. He's charging $8,000 for a boob job. He's got a huge account, millions of dollars. He's got a $25,000 position. He goes in and does a boob job. He comes out, and his $5,000 trade goes to $1. I mean, he's down $4,000. He calls me and goes, My boob job cost me $4,000. So how you trade and what your job is makes a difference, right? It makes a difference. How much time can you dedicate? I have some pet peeves. If you wake up and you don't look at your trades, say you have positions, and you don't look at them till 15 minutes after open, you have zero chance of success. You have to be there before open. You have to be there at close. If you can't, then you have to do something differently. That means you don't buy weeklies. Maybe you add a week. Maybe you buy stock. Maybe you sell it if you're not going to be there the next day and you're going to be on the road. It all matters. It all matters, okay? An account with $10,000 and a 50% goal is different than 10,000 with 10% goal. Your risk reward is all based on what you're trying to achieve. Because I'm telling you, if you go tell your wife you made $100,000 and you lost 40 in the same week, she's going to scream at you. She's going to scream at you. I made my dad $1 million, and he's sitting in the room. Let's say you make somebody $1 million, and you lose 10,000 the next day. So you're still up 990,000. And he goes running into the room where my mom is and says, your son just lost $10,000. You're freaking out. I'm telling you, it happens. So don't deceive yourself. You will make money, you will lose money. I use a 60-40 rule. If you make 10,000, you lose 4, you're fine. You're doing fine. You're growing your account. Okay, strategies. Lots of different strategies for making different accounts work. The roll strategy. You roll up, you reduce risk. What does this mean? Let's say you had SPX 2380s. We had the 2380s at 170. Say you had 50 contracts. So we put in 8,500, and they're up at $5. So you can sell them. Super bullish market. Ratio is great. You take 25,000 on a 8,500 investment. And immediately, I go buy another 50 of the 2390s. So let's say you invest at 10 just for numbers' sake. So you have 15,000. You put 5,000 back in on the next trade. If it goes to zero, did you lose money or did you make money? If you even think that you lost $5,000, you will fail. You will fail. Absolute fact. Okay? Because what you did is you rolled up, and the last roll up will always fail. So anyway, those things went, the original trade went to 20. The 2390s went to 10. We sold those at 5 too, but we bought the 2395. So we sold those at $5. So you made $5, $5, $5. But then if you bought the 2305s, we didn't, the 2405s, but people did. And let's say you bought those at $1 and they go to zero. Do you care? If you care, you will fail, because the last trade always fails. It just.
All right, so I'm gonna go ahead and stop it there because I can sit here and watch this video, the whole hour through. But yeah, I just dropped the link inside of the chat, so you guys should always refer to that video. Whenever whether you're making profits or you're losing, it's always a good video to have fresh in your mind, because you know Sam's been doing this for like 40 years now professionally. He was doing it while like we have all of this information on our computer. You know, he was trading options back when you had to call in the trades, so he knows what he's talking about. So it's always good to refer to that. Switching gears, this is welcome to Gold Rush Weekly Watch List. If you are not a member of our server, you can try us out for free for 1 week if you visit goldrushgang.net and go ahead and click join us. And yeah, just click the 7-day free pass and you'll have us for free for a week. So let's jump into the market. So I know Jay was having a bit of trouble jumping on, so he usually covers S&P and the Qs, but I'm gonna go ahead and let me see if I can give a quick analysis on it. Where is my? All right, we just do SPY. I usually do futures, but we're gonna do SPY and QQQ. So, I mean, obviously last week was quad witching. We had this massive red week last week. Let me just get rid of some of these levels, and then you see we get a little bit of a bounce. If you follow my cursor here on the daily. So we bounce off the 50, get like 17, 18, 19 days before we turn around, and then bounce again off the 50 and 17, 18, 19 days before. I think this was a shorter period here. And then we bounce off the 50. And then this one went for a long time before it came back to the 50. And it's just been repeating this cycle for a while. And let me see, I'm reading the chat. Small account challenge was awesome for my discipline and confidence. That's what we love to hear, Margaret. And you killed it last week. You really did your thing. And I know that I can speak for the entire group and we say we're very proud of you. The small account challenge is built for that. It's built for people to, for people to not only compound their gains, but compound their confidence, right? Because now at this point, once you say, hey, I gotta take profit at 20% or 19% or whatever the case is, now like you have no reason to not take it. And you take enough 20% profits and it's gonna bless you, right? Yeah, same with you, Jeff. You killed it last week. It's meant to compound your account, but primarily it's meant to build your confidence and make you more robotic in your trading. So yeah, we love the small account challenge. There's gonna be a nice prize at the end, so I'm really excited for that. The first time we did it, people doubled their accounts, and so that's kind of a prize in and of itself. But we have something nice in store for whoever makes it through. I think it's either 4 or 5. I think it's 4 rounds, 4 rounds and a bonus round. So, all right. So back to SPY. Yeah. So SPY just keeps bouncing, and now it's at that 50. It's at the 50, right there on the quad witching Friday. I think we will get the small account challenge on a quarterly basis. I really love playing small account challenge during quad witching. That's like one of my favorite things. That's when we did the first time we did it. It was back in March, right after March quad witching. So we're just gonna, during the month of quad witching, we'll have a small account challenge. That way you guys can make sure and remember how to trade, how you trade, and how you've been growing your accounts. Just using discipline. It's a great idea. So yeah, I mean, now we're at the point where we're either going to fall below this 50 as we have, in the past, like such as over here back in October, November, where we fell and then gapped right up above it again. Maybe we'll trade under it for a day, like we did on this day on March 5th. Maybe we just gap up on Monday and run the way that we did back here in June. So we'll see. There was a lot of consolidation here, which kind of was like a slow meltdown, which is really painful, to be honest, because like premiums get killed and all that stuff. But at least it wasn't like a straight gap down like this, right? This is, imagine waking up on this day and then losing all that profit or losing all these, in your share portfolio. So we'll see. We're at the 50, crucial spot. I think Jay posted or somebody posted that that historically the week after quad witching is just as bad in September. September is just a bad month. So, I have very low expectations. We can come back and test, some of these levels, some of these downside levels. Oops. Here, right? Here. Which would be painful for anyone who's bullish, but you could just play some puts in the meantime, and just write it down. And this would actually be very healthy for the market because it would give time for the 200 to kind of catch up. This 200 is ultimate support, and we haven't been on its 200 since the last time we touched the 200 was in June of last year, right? So right after the death cross, we came back up and bounced, and we've just been on a rally ever since. So we'll see what happens. I don't know. But we take what the market gives us. So let's move on to the Qs. So pretty much the same story. It did this really ugly cup and handle thing on a weekly, which I'm gonna go ahead and erase because that looks terrible. We put in, we came and we tested the 50 back here. And then same thing, we kind of slow meltdown, kind of consolidation, kind of choppy action here. And then we put in a massive bearish day on Friday. So it looks like, to me, it looks like we're going to want to test some of these levels here, like here. If we break here, we're going to probably look to test this previous resistance over here, which sits us right at the 50. So, as bullish as I am, I would like for us to come back down to this level here. This is a good level because it was a nice, strong resistance in the past, which might form a strong support for us. And it sits right at the 50 simple moving average. So, and then this will give us, we hit down here and then we just go massively stupid up to like 400. So I would love it to get down here, but who knows? But I'm watching these two lines for sure. We'll talk about it, in the server. So I'm going to go ahead and get on my my watch list. I don't have too many for you guys. Let's see. Okay. So we can get rid of this. Ignore that one. Okay. So these are, for me, in my opinion, A1 setups. The first one that I have is plug. The reason why I like plug is because it bounced out of the morning star on the weekly. So if we look at the chart on the left, just make it a little bit clearer. Okay, we look at this chart on the left. This is a weekly chart, and you know what? This is actually an evening star, right? This is an evening star. So a morning star is basically a red candle, a doji in between, and then a green candle. This, and here's Jay Cat. Let me give him co-host. What up, Jay? So yeah, so Morningstar will be like like bearish flip bullish, right? This was a bullish move, and then a doji, which shows indecision, and then a bearish move. So this is called an evening star. So we hit an evening star, which is typically a reversal pattern, but then we bounced right out of it. Like we came down as low as 23.17 on plug, and then we bounced out of it. We made this massive move. You know, it was just with more, I mean, higher volume obviously than previous weeks, and with a little bit of a stronger move, it would have been a bullish engulfing. But anyway, we hit the reversal pattern, and then failed the reversal pattern, right? So that's what I like. The IV is low on this compared to where it's been historically. The algo flow is high. The algo flow is, you know, for you guys that don't know, it's basically algorithmic trading occurs on high frequency trade floors, and there's a few apps that track it. And so, you know, if the line is green, then it's bullish. If the line is red, then it's bearish. If it's pointing up, it's bullish. If it's pointing down, it's bearish. If the line is pointing up, but the stock is pointing down, that's bullish divergence. That shows that usually there's a reversal or something that happens right after that. So, you know, soon, within a few days or a week or two. So algo flow, very important tool in my opinion. We hit a double bottom on a weekly, right? Here's one bottom right here with a lot of buy pressure. Here's another bottom with a lot of buy pressure. And we hit that higher low. So here's the one bottom, here's the other bottom, you know, here's the other bottom over here. And it's forming a higher low, which is forming an uptrend, right? Here's your uptrend, right? So we got an increase in volume here, as I mentioned, higher than the volume to the previous 3 weeks on a green week, which shows sentiment is bullish for now, right? We show strength relative to SPY. So SPY on Friday was massive red, and this is obviously massive green. I'm looking for a break and hold of the 50 simple moving average, which is this red line. So a break and hold. We haven't broken above it since back here in May. And it kind of held, and then it fell. So now I'm looking for it to break and kind of trade in this area, 26, 27, for a day or two before it continues up. These are the levels that I have charted for it. And then the ultimate level would be the 200 moving average for plug. I'm going to go through these quick, Jay, so you can get into yours. And I might get interrupted by a phone call, guys, that I got to take. So I'll just put in that fair warning.
Take your time.
All right, cool. The next one I have is apps. This is probably my favorite setup for the week. As you can see by the notes, I just went pretty crazy on this one. I really like this setup a lot. So the 3 bar on a weekly occurred. So one massive bar with massive volume came in on this weekly. This was 3 weeks ago. And then we put in a resting bar, which is, you can tell by the volume. I know a few of us were talking about it. I think Trini was talking during homework. We were talking with Trini about this. Me and S were talking with Trini about this. Resting bar is like a bar that doesn't retrace 50% of the previous massive bar. So it came down, didn't touch halfway of this. And it just, you know, it's a red bar, but it's just chilling, like low volume. They're just holding it in a kind of a holding pattern. And then higher volume came in on the last week, and it broke through the resistance of the previous 2 bars. That's a 3 bar play. If this would have been a true clean 3 bar play, then this bar would be the same size as this bar, and that's what you can expect. But on a weekly time frame, it's kind of hard to grab those moves. However, this is just a strong bullish move, right? So 3 bar play on a weekly occurred, possible continuation. We have an inverse head and shoulder on a daily. You can see it here faintly in purple. It came down, found the support, bounced, broke through the support, fell into demand, and then bounced, and now it formed the right shoulder over here. And so now we're looking to work our way back up to, for me, the final target would be 80 on this. The range so it was, I don't know if you can see this shaded gray box, but it traded in this range for a little bit, and broke down from this range. It looked like it formed a supply zone over here where it just kind of made a massive downward puke out of this box. And after it bounced to this previous demand, it's back in the box, it consolidated for a bit, and it looks like this is a possible demand zone here, this basing area right here. So now I'm looking for it to break out of the box, break above the 200. This is the 200 right here. It's currently above the 50, inverse head and shoulders. To me, this just screams bullish. It's right at the neckline. Higher volume, right? It showed relative strength. So Friday SPY was weak, and apps was strong. Very low IV, and yeah, very low IV and strong bullish divergence on algo flow. So if you look it up, if you do in the command in our robot room, you do TR hyphen algo flow and then apps, it'll show you that the apps line goes down, but the algo flow line goes up, right? And so we'll see if it continues, right? Sitting above the weekly 250. So the 200 is the red line. I should probably make these match. Oh no, the 200 is the purple. The 250, the 200 weekly is the purple line. Let me just match these colors so we don't get confused. This is the 9, I believe. Yeah, this orange and purple line is a 9, and the red line is the 50. Yeah, so it's above the 50 and above the 9 on the weekly. Yeah, I knew that didn't make too much sense. Weekly sitting above the 9 and the 50. And then let's just look at the RSI and the MACD. So RSI is pointing up. MACD is, it went from weak bullish back to strong bullish, right? It was the bullishness was slowing down, and then it put in another strong green candle. So that shows strength. And TTM is at peak, so it might just stay here for a while. It depends. Let's see. And I would like a break and retest of the 200. So break of current level and retest as support right at the same level at 66.83. And then if we break and hold, then I'm looking for it to take out this high, this high, this high, this high. This is a possible machine gun. It's called the machine gun pivot if you play strat, the strat. And it basically means the reason why it would be a machine gun is because it'll kill the the stop losses here for the short side, here and here and here and here. Just kill them, right? Short sellers will cover. I'm interested in seeing what the short interest on this is, or if it even shows up on this list. That was APPS. I doubt it shows up. APPS. Let's see. APPS. No, nothing. Doesn't show up. Okay. So yeah, I just like the setup. It's, to me, it screams bullish. So I'm keeping apps on my watch list. Next one is OSTK. OSTK is another favorite setup, another strong setup of mine. It's trading within a range. This is the range, this gray box, underneath the 200 moving average, underneath the 50 moving average, right? So I'm gonna get to this in a second. It formed higher lows, making an uptrend. It shows strength relative to SPY. Terrific risk reward to the upside. So what that means is you can take a call here and you can set your stop over here, anywhere over here. And this is how much room you have to come down for all this upside, right? For pretty much another machine gun setup where you could take out this pivot, take out all these highs. I would like it to be better. Like so in terms of stops, you can be conservative and set your stop over here in this area. Let me give this a different color. You can set your stop in that area, or you can set your stop in this area, right? This stop here will give you a much better risk reward ratio than down here, but this stop will let your play breathe a little bit better. So what I mean by risk reward ratio is, let's say I want to enter at the close of day, right? And I'm targeting, and this is a trading view tool, and I'm targeting 86.60, right? If I set my stop down here to where this previous support is, then my risk reward ratio is 2.67. So I'm willing to risk, the amount of money I'm willing to risk to the amount of money that I'm willing to gain is 2.67 favor to the upside. If I bring this stop up here, I might choke out my play, but the risk reward here is 8.28, much stronger, right? And there's nothing wrong with this. There's two styles. You can either be conservative, and if you think this is a loser because it's back in this territory, you cut it. There's no problem. If it flips, you can get back in. No big deal, right? This lower risk reward might give you the opportunity for the play to run a little bit more, but I wouldn't play a risk reward this low unless I'm playing like, January expirations or March expirations or something like that, or leaps. Something like this is probably better for weeklies or even October 15th expiration. So I think it's a good risk reward to the upside. It felt, let's see, trading above the weekly 50 is right here. It's right at the weekly 50. And yeah, these are all messed up. I gotta fix this. It's trading above the weekly. Where's my weekly? Here. Trading above the weekly 50, or I have to get above the weekly 50, and it's trading at the 9. So we just have to break. These are strong levels to break right here. Hold the 9, break the 50 on the weekly. It fell under the 200 and is acting as resistance, and now it's right back at it, acting as resistance again. The 50 on the daily is breaking down below the 200, which is called a death cross. So that might trigger a bunch of selling on people's radar. Maybe not. So I would just be aware, keep that in mind. That death cross, there's scanners, people run scanners for that. And so that might show up on somebody's scanner. But yeah, it fell under the 200. It's fighting the 200 and the 50 right now. If it breaks here, this is going to be a tough level to break. But if it does, and it takes out this monthly high, so this is just a very strong resistance right here. But if it could take out all three of these in this area right here and hits, hold 76, I think it will be a strong play. Strong volume came in last week. The volume last week was just at the 30-day average, and it's way higher than the previous 5 weeks. Low IV and bullish divergence on the algo flow. I like it above, again, I like it above this level. I really like it above 76. At 76, I think is a strong play for, 76, take it to 80 through these two. And then from here, you can maybe take it to 85, right? So this is one of my, another one of my favorite setups. If we look at the MACD's, it's kind of consolidating. It's kind of flat, but it's still bullish. The RSI is at 55, pointing up. TTM is stable right now with a small red candle. If you guys don't know what TTM is, if you're a 24K member of Gold Rush, there's a webinar section and there's a 2-hour-long presentation on TTM and MACD. It'll talk to you about what this means. But this red dot here tells me that there's a big move coming. It did the same thing for all this time here while making a nothing kind of move. So it flipping, coming down. Maybe it'll hold right for another week or two and then hopefully flip back up. But again, this is a very, very strong resistance here. There's 3 strong levels, 3 strong indicators that this is a strong resistance. The 50, the 200 moving average on the daily, and this previous monthly high right here. And to get the monthly, I just switched this over to a 1-month time frame, and I saw that and we're forming an inside month, and it's favoring the upside. So that's nice. Nice move on OSTK. I like this, and it has earnings in 6 weeks. So I like this. This is one of my favorites too. Next one I have is LAC. Simple setup, simple strat play. This is S dot, one of his ways to play the market. Pretty much take it whichever direction it breaks, upside or downside. I'm biased downside. I think there needs to be a handle to be formed on this weekly setup. If we look on the left-hand side, there's a cup, and I want a kind of a handle to form at the resistance, come down, right? We just draw it out. Let me get a path tool. Where's my path tool? here. I want it to kind of come down, you know, reject, come down to this volume shelf right here, this area of extended volume on the left-hand side, if you're looking at my cursor, this volume shelf, you know, trade sideways for a week or two, and then hopefully like a 3-week move, right? Hopefully a 3-week move. Come, form the handle, and then bounce off this volume profile. So that's what I'm liking for it. TTM and MACD are peaking. So the MACD's found its kind of peak, and it's, you know, it's doing one of these, which I find interesting. Yes, baby. Can you ask mommy, please? Mommy will take care of you. So it's doing one of those, which I don't really study too much on MACD, but I find it interesting. These two lines are also act kind of as an RSI, and they're very, very high. So I expect them to come back down. On the actual RSI, it's just up high. It's at 64. 70 is oversold. As you can see, we put in higher lows, excuse me, lower highs on the RSI as well. This is just a wild swing to the upside, which I just think it's gonna bring it, you know, what goes up must come down, and what goes up higher falls faster, right? So that's what I'm looking at, kind of like a pendulum move. I want it to come back to down to these levels. It can take out all these stops, nice clean strat, machine gun to the downside, take out all these stops, hold around this area, which is below our volume shelf, but it is what it is. And then work its way back up. I like this play, nice simple play, cheap premiums. Yeah, don't want to think about it too much. Next one I have is Zoom. I like, so Zoom, did I write anything up on this? I did. So Zoom formed a death cross after the gap down on earnings, right? So it had good earnings. You know, they beat, and there was a surprise of profit, but I guess investors expected much more. So it gapped down. We put in a double bottom in a demand zone. So this is one bottom, this is the other bottom. The demand zone is back here and also right here. We put in a hammer on Thursday, and you know, so now we have this upside gap to fill, this post-earnings gap to fill. This might have been an overreaction. It held support. It has a clean upside, you know, clean upside strat machine gun move to make. Take out these highs right there. And yeah, I mean, if we can pop this high, we can easily go to that one, pop that one, easily go to this one. And then now we can work our way up to, you know, to hit this, to break this, this previous support, which will act as a resistance, and work its way up to the moving averages. Stay at home names got a bunch of interest on Friday. If you were paying attention, you saw a bunch of money flowing into like DocuSign and TDoc and stuff like that. Low IV, high algo flow, right? And then the RSI is going to flip to the upside. Like everything here is oversold. Everything here is oversold. So it just looks like it's going to work its way back up. We'll see. The death cross does scare me though, right? So just keep that in mind. Next one I have is Chag. I didn't write anything up for Chag. I just noticed that there was a hammer on the weekly. A hammer on this weekly. Higher low. And just a massive downward move. So this looks like it might be a supply zone right here. A daily supply zone. Oops. Which means there's resistance there. And then it bounced out of this what looks like a previous demand zone, right? Some basing and then a massive move up, and then a bounce. So it looks like a possible demand zone here. So I'm just gonna color it green so we know what it is. And yeah, I mean, I think it's clean. The moving averages are converged. I'm just interested in seeing what it does, because this is a nasty move. Bearish engulfing on a weekly, big nasty move. So either we bounce and form an H and then break, or we bounce and form an H and then base and then work our way up, or we just continue to work our way up. So I just found Chag interesting. I didn't really write anything up for it. I'm gonna keep it on watch for me. I probably won't put it in the group because it's like we just need to continue watching it. Canon or Canon or however you pronounce this, crypto miner. I have this favorite to the downside. Do I have a write-up on this? Yes. So I like it to the downside move. It broke down below 200 on a daily. and it hasn't reclaimed it ever since this break right here, right? It broke here, came down, found resistance, and came back down, right? It triple tapped on a 50 to the downside, so it came and tapped here once, tapped here again twice, and then it on the third tap it broke down, and now it's retesting it as a support to the downside, right? It's retesting it as a downside move support, in my opinion, right? This is all opinions. And we can get a nice easy play with risk reward skewed downside. Take out this low, we hit this low, and this low, right? Nice clean strat move. Risk reward skewed to the downside. I'll show you what that looks like real quick. I think that's my last one. I would enter at the break of this. Personally, you can enter at the break of the low of day, but I would enter at the break of the previous low, and I would set my stop at the close, at the open of the previous low, right? So break of previous bottom of previous low is my entry, and the close or the open of the previous low is my stop, and that gives me my damn, this got shorted to hell. And then my ultimate would be a retest of this low over here, a retest of this low over here, right? Which would give me a risk reward of 3 to 1. It's not the best, but with options, you know, this will pay. Nice clean setup, nice risk reward, simple, nothing else to say. Jay, what you got?
What up, man? Hey, what's up, everybody? Sorry I'm late. I got in when you started on apps. Did you have anything before that?
We mentioned I did plug, and then we briefly spoke about SPY and QQQ, but I don't know if you want to give your lens on that.
No, I'm sure it's probably about the same. It looks like shit.
Yeah. Looks like shit.
Right.
Looks like shit, and we got to wait for it to give us a move.
There we go. All right, that's my opinion.
Stop share.
Let me see.
Jeff said, "I got homework answers for my MBA on Chag."
Yeah.
Chag is a great service, man. The chart looks like shit, but
Yeah. All right. Can you guys see my screen? Or
yes.
hey, Huey, can you see it? Perfect.
Yes.
So I'll be honest, I don't like what I have, but they're setting up, and it's just all SPY dependent. You know, it's all market dependent at this point. Some more than others, but here we go. So first one on my list is FSLR. Daily flags just don't really look much better than this. Tons of volume coming in onto this one, which kind of gives me, normally I would not like. But with SPY doing this on Friday, all that volume coming in to keep this level, basically this level afloat. Now it gives me a different feeling about it, because this could have just died with everything else. Also, solar is a hot topic right now. I believe Biden said something about last week how he wants to get solar. There was something in the news in solar. Huey probably has a better memory about it than I do, because I feel like we talked about it, or at least had a small interaction about it on the server.
Yeah, there was some catalyst for it.
Yeah, which was this day. But flags just don't look better than this. But the volume pattern is a little odd. Next one here is good old Snapchat. Basically, it's just been playing this range, this range, and I could add that it's just been playing this channel, not really moving down, not really moving up. I mean, it is kind of drifting down, but there's this huge gap that's kind of keeping it afloat, as well as this here. Big volume shelf right here. So if it can break through, I feel like and it's got this resistance line. If it can break over this, break this volume shelf, it's got some room to run, and basically it's got room to run to all-time highs. So Snap is actually not that bad. I mean, but SPY looks like shit. And it really gives me pause and everything. But this, in general, this whole chart looks really, really nice. Boeing is my next one. Now, this is by definition, to me, a bear flag. But this just doesn't look as nice on top here. So this is really, I had this as more of like the wedge, and anybody that's talked to me long enough will tell you that I typically don't care for putting too many different names onto these things because they're all basically the same. But this is where the name actually and like the actual definition of it will come into play. So we've got a big volume shelf here. We can see all this volume on this part of this histogram right here. So it's been holding it. Now, Boeing is one of those stocks that is very, very much SPY dependent. So if SPY does decide to take off, this could really launch. You know, from 216, this green line is the 50-day to 222. This yellow line is the 200-day to 229. And we don't really have much in the way of support and resistance anywhere here. I mean, I guess I could drop this line here, which is still kind of like right at the 50-day. And honestly, like if we started to move up, we'd see the 50-day start to curl up. And lo and behold, my guess would be by the time we got up here, the 50-day would be right there anyway. So this has room to run on the upside. Conversely, though, it has just as much, if not more, room to run on the downside. So if SPY really starts to tank for these next couple of weeks, here would be your next support basically based off of that, off of these two lines. So this area would be your next support. And then we just see a real big vacuum, you know, basically like a vortex of nothing. We don't really have too much support here. This is going to be a mini support here, if anything, but it's really going to run to basically here and then here with this huge volume shelf. So not saying that it is going to go to 170, but it's got that kind of potential, especially if SPY really takes a dump. So this is kind of one of those, we have to let the market determine what it's going to do. But Boeing could determine it on its own as well, based off of the definition of the wedge. If it breaks above the top, then it's going to move up. If it breaks below the bottom, then it's going to move down. So SPY could be tanking, you know, the whole market could be tanking, but Boeing could break out. That being said, the whole market could be going up and Boeing could break down. But my guess on this is whatever SPY does, whatever the market does, is what Boeing is going to move with it. My last one is Moderna. So basically, I looked at this as one big flag right here. Now, again, this is kind of similar to FSLR, where if you look at the true pattern of a flag, the volume's got to be descending. And it basically, for the most part, has been over the time. You know, it got this big volume spike here, another big volume spike here. And then it's just been kind of meandering down until this big volume spike here. But look what it did. It basically formed a hammer. So it went down, and this blue curve is the 20-day, went down, touched it, bounced off of it. This red line here, this red curve here is the 8 EMA for me. And it didn't close above it, but it closed right at it. Let's see, this closed at 43.05. This is at 43.18. I mean, the $400 stock, and you can't really nitpick what 13 cents. So this basically closed at, or you know, at the 8 EMA. So this is a very bullish sign. The other thing I really liked about this is because it kind of just built a pattern within a pattern, and now we get another little flag here based off of this flagpole. It's not going down there. That's weird. But based off of this flagpole here. So we get another little mini flag. Again, a lot of volume coming in to create this hammer. Even though it didn't break out, it's still just, it needed to make 8 from the low of Friday, it was 407, we'll call it, to 430. That's a 23-point move. If we got a 23-point move off of a break like this, we would all be very happy. The 3 things that ran through my head are probably not appropriate to say. But we would all be very happy. So yeah, I mean, Moderna does look very much, does look like it's got potential to break out. Now, again, all this with the caveat on SPY, or the overall market in general. If we all dump, I don't think many of these will make it out. Moderna and FSLR probably have the best chance of bucking the trend if they want to. And I base a lot of this off of FSLR is in a hot space right now. Moderna is obviously in a hot space right now, but all the volume that's poured into both of those to keep it up on a very red day for the market on Friday really makes me think that there's a lot of institutional money coming in on this. That's all she wrote for me.
Yo, Jay, do you want to look at there's a few requests. I see DraftKings and REAL.
So DraftKings, it depends on if you're a pessimist or an optimist on DraftKings in general. It could be starting to build a head and shoulders here with shoulder here, head here, and then the start of shoulder here. If you are pessimistic on it and you want to see this play out, there's your neckline. Once it breaks beneath 58, it's going to see 55. Breaks 55, it's going to see basically 50. Now this 50 and 100 and 200 day are converging. So if this starts to break and they both start breaking away, then maybe, 53, 52, whatever this 50 day is. But since they're converging right now, they're both going to essentially be the same. If you're an optimist on DraftKings, you can say it's going to actually bounce off of this. It's kind of a double bottom look. It's not truly a double bottom, but it gives you that kind of feel. As well as it's curling up. The 20 days has held it up. It kind of touched it on this bad red day, and as soon as it touched it, now we're seeing green days and we're starting to see a move up. I tend to lean towards that scenario on this. It might move sideways for a day or two, but I think it's going to see 64 a lot faster than it's going to, 64, 65 before it sees 55. But that's kind of all I see. There is this, mini volume shelf here that it's been holding as well. So that gives you kind of, more evidence to the bullish case here that it's going to keep moving up. Actually, as well as, the 50 days has curled, is basically moving down here, started curling up, and now it's really started accelerating up with it, as well as the 200 day is still moving up. So I do tend to lean towards the bullish case on DraftKings. What was the other one? Real? REAL?
Yeah.
I don't think I've ever looked at this chart. Kiwi, have you ever traded this or even looked at this chart?
I feel like I've seen it like show up on scanners. And so I opened it up, but I've never traded it.
So let's get some support resistance here.
So Jay, do your charts look different when you're trading versus when you're charting?
No, I keep all this shit on.
That's nice. No, I mean it's nice and clean. My charts are like full of garbage.
Yeah. So like I try to keep them as clean as possible. Simply because if I get too much stuff on it, I forget what half the things I wrote, why they're there. My charts used to look just like lines everywhere, notes everywhere. It's just and I'm a messy person in general, so to keep it as clean as I have is actually very, very strange to me.
Show it to your wife, man. Be like, look how neat I am.
I know she'll still look at these like, what the fuck are all these lines for? Like, you just couldn't see it. Why do you need that there? All right, so I think we've got gaps here. Hold on.
I see a couple. I'm sorry. I see a couple more requests for UPST, GSK, CPLG. I have to hop because I have a call at 7.
Yeah.
But
yeah,
if you guys,
let me see if I can. There it is. UPST, GSK, CPLG. Yeah, that's probably the last 3 I'll be able to do as well, but I'll get to them. So, I mean, that's basically all I see. Now, based off of this, so we have a bit of a double bottom look. It's not really clean. You'd rather see the right part of the double bottom be no less than the left, no lower than the left, but $12.11 in all honesty is not huge. But if you wanted to be a real strict technical analyst, that's a lower low, right? So, but it basically a double bottom, and if you have that thesis of that being a double bottom, then here's your neckline. It's a little bit lower than that. Sorry, let me be a little more precise than that. So there's your neckline. Now it broke through, which is very bullish, and look where it stopped, right on the 50-day. Also, basically just got into the gap. So this gap is going to, the bottom of the gap is going to prove as resistance, as well as when you've got a major moving average coming right to it. That's going to be tough to break. So this is one of those where it has to break the 50-day and it has to clear into the gap to have any sort of momentum to keep moving up. Now, your next point of resistance is going to be the top of the gap. And so, you're looking at, 15 to 16.20, $1.20 of upside once you're into the gap. And stocks don't trade well when they're in gaps because really there's no buyers, no sellers, nothing has happened here. Obviously, if we keep going left, there has been activity here. And clearly, we can see volume has traded there. But when you're looking at trying to get the market psychology of the most recent traders, there's not very much action in here unless you start looking to everybody that traded it prior. So a lot of these people are probably out of the market. A lot of these people are probably out of the market in it, besides the large institutional investors, and they just are most likely just holding it no matter what. So, the recency bias on this is there's not much action here. So it's going to trade funky because it's got to establish what it wants to do in here. If it breaks out, this is where you get a real play, but unfortunately, now we've got this downtrend to contend with because one tap here, 2 taps here, 3 taps here, probably going to tap there again and fail. Now, it just depends on what it does when it fails. So if it can just kind of make a small consolidation, it's, basically my triple tap. I don't particularly like it when it's this, this angle, especially over this much time, but it could break out. And then we're talking about some things, but the 200-day is going to get into it. So, for a $14 stock, if you're bullish on it, you've got a lot to contend with just to make $1 here, a $14.50 stock, make $1.50 here, maybe $2. And then if it breaks out, you're only going to make another $1.50 here. To me, this is just something to stay away from. I wouldn't really care for it until it broke 20. because if it finally breaks through all of this, I'd like to see a breakthrough of 20, retest 20 again, and then go, because now we're starting to talk about a break of 20, immediately moves you to like 22 and a half, 23, immediately moves you to 26, then immediately moves you to 30. So, to me, this is just wait and see. I would set an alert to 20. Now, if you're talking downside, if you're bearish on it, you've got a lot less to contend with. You basically have a shoot back down to 11 and a half, 12 here. If it can break through, break down beneath here, the 20-day is gonna hold it up a little bit, but you've got like a $4 gain, roughly $3 gain, roughly. On the downside, that'll be a lot quicker. But on a $13 stock, it's just, to me, is not worth trading to the downside. So kind of this is a no man's land for me.
I'll see you guys. I'll see you guys in the server.
Hey man, have a good one. Thank you, bud.
No doubt. Later.
UPST. Right now, to me, this would be a day trader. Had this big move up. Nice little flag here. We also had the, lowering volume, and when a broke out volume came in. Now, this I couldn't play this as a swing until I get another pattern here. But if you wanted to day trade this has probably got some room to run, especially for a $300 stock. 10% on a $300 stock is $30. So 5%, to get a 5% move is going to give you a $15 move, and you could see 5% on this in a day easily. So this is something I would have to see what happens intraday. Your kind of levels here are back down to here. Now, if you wanted to play this as a swing, I would like to see it come back here, test it, give it a nice, maybe a hammer right here, and then you could get some real nice upside. So this is all basically dependent on intraday movement to me. So here's the past few days. We've got some support here at 292 based off of what it did yesterday and Friday and Thursday. I would actually play this just like S's levels. A break above the high, a high of yesterday, and I can't make a proper line on, but a break above high of yesterday will get it going. A break above low of yesterday will get it going to the downside. That's how I would really play this, even though it's not necessarily the way S likes it. He likes doing it off inside bars and then the breakouts of that. But this is how I would play this intraday: is anything above 309, it's a go for the long. Anything below 293 is a go for the short. Otherwise, you might be able to scalp some bucks in between. What is the GSK? Yeah, so Glaxo's like a $1 trillion company, and you can see that it just doesn't trade very well. Like there's a lot of gaps, and all this, like this from here to here is what, a $3 move in a month. Yeah, 10% move in a month. It's not particularly something that I would play, but if we're looking at the chart, there's just so much. These three candles, while they're descending, are still pretty bullish. Now, I wouldn't be surprised if you saw another one like this to touch the 50-day and then getting a move. And why I say these are bullish is because it tried to, these lower wicks here, it kept trying to get sold off and it kept getting bought up. It sold off again, but it kept getting bought up. Sold off again, kept getting bought up. Now, I would like to see another one of these touch the 50, to be honest with you, before we start to see a really nice move. You could get a, 38 to, $40 move relatively quickly if we saw that. And this is again, going to be SPY dependent as well. But if we're looking at strictly patterns, you can, if you squint enough, you could make a descending wedge, which is a very bullish pattern. So again, you see where the tip of the wedge is. It's right at where the 50-day would be. So I would personally wait for something here, to 38.19, 38.20s, ideally on some more hammerish candles like this. Does that, you could get some run to 40 relatively quickly. This is the 100 days, so 39.80, 40.5. So split that, roughly down the middle. You could get a quick bump to 40. If it breaks 40, it's going to have to contend with the 50-day and the 20-day all coming above it. But it could really get going. I mean, it basically did the same thing here, in July to the end of August. So, I mean, that was roughly a month, 28 days, 22 bars. So 22 trading days. It made a really nice move. So it's got that potential in it if it wanted to. But there's a bunch here to contend with. But this is how I would play it. I honestly wouldn't even be looking at anything to the downside based off of just these days. What's the tool on toss to string the percentage when you drag between points of candles? Oh, actually, so that is just the toolbox that comes up whenever I make any sort of trend line. Like, so as long as it's not a price line, if you do any sort of trend line, you should be able to have that toolbox that comes up and shows you all that, 20 days, 16 bars. So it's 20 calendar days, 16 bars would be 16 trading days. From where I started to where my point is right now, that's a 9.8% move. That's a $3, which comes down to $3.81. And then the angle is a 57.89 degree angle, if you care about that. But yeah, no, that's a great little, it's a great little tool thing to turn on. So you have it. Now it goes away once you hit it, but I think you can turn it to, on hover. Yeah, so you can turn it on to when you hover over it to pop up as well. And then CPLG, we'll end on that one. Kind of triple tapped here. So it's kind of a triple tap breakout, or just a real big ascending wedge. So, or a high tide flag, but kind of an ascending wedge. So 1 tap, 2 tap, 3 taps. Now it came down here. This would have been my entry if I was looking at this as a triple tap, but what it did was because it came back and it held moving averages. So this one held the 20-day. That's a pretty bullish sign for my triple tap. But the next day, what it did was it died. But all it did was it just died right to that trend line and created the 3rd tap of that trend line. And then next day, bounced right back above it. So this is kind of your 4th tap here, and then it just went. So it had enough energy from this tap to go here. So after this breakout, now we're seeing it tried to keep going, but it got beaten down. Now, core point logic. I'm assuming this is some sort of, let's take a look here. Core point logic. Oh, this is a REIT. That's why it's in US dollar pennies. So REITs are tough to play. Now we can look at just basically off of patterns, but this is all REITs do. Like they move up, consolidate, move up, consolidate, move down, consolidate, move down, consolidate. You know, so if you're what's that fucking guy's name? Gerald Peters, you know, or just even like a classical technical analyst, like this is, you know, very much classic moves, like up, consolidate, up, consolidate, up, consolidate, up, you know. So these are very classical moves when you're looking at, you know, macro charts kind of like this. But if we want to get down to a little bit here, like this does definitely look like it's got potential to break. What I would like to see it do is, this is not an engulfing candle, but you know, if you're just looking at bodies of the candle, let me just get this over here. If you're just looking at the bodies of the candle, that is a, you know, that's a very much bearish pattern, because the whole body of the candle engulfed this one, and it almost engulfed this one, but it's still engulfed this. But we work with wicks, so it's not fully an engulfing pattern, but this is kind of a bearish pattern where it gaps up and then closes beneath the gap. What I would, and on a bunch of volume, and this only trades with, oh, this trades so thin too, because it is a REIT. You know, this is one I would just not really even bother playing, Jeff. Yeah, I mean, because T's just looking at this, and so me looking at it, this is very bullish. All of this right here that happened is very much bullish. What I would like to, after this, I would like to see come back down to 14.5 and then bounce back up. I just don't know how much you're going to get out of it. This is what, you know, I think this higher highs, or higher lows, excuse me, now made a higher high. So, you know, this is very, very much bullish. So he's just looking at this. I don't know if he looked into the fact that this is a REIT, but he's just looking at that, and that is very bullish here. So this candle is a little bit scary for it. But it still doesn't necessarily negate this breakout. So, you know, a lot of stocks will do, what they'll do is they'll break out, come back, test that breakout area, and then that's when they get their real move. So if it can do that, if it can hold this 14.5, I don't know how much time I don't know how much time he put on it. I didn't see him call this out. So I'd go, if anybody wants to put it in the chat when it's for. 10:15. Thank you, Jeff. 17.5. You got a month. I think that's plenty of time on something like this, especially, you know, this has moved from 12 to 15 in, you know, a month and a half. So it's definitely got that sort of potential to make a move. It's just this last candle is worrisome, but it's not too worrisome unless it breaks 14.5. Then, you know, then I'd say that it's a dead play, or it's a broken play. Fola, you said it's the La Quinta hotel chain. It's not necessarily what I see. Let me share this. I mean, the only public U.S. lodging REIT strategically focused on the mid-scale and upper mid-scale select service hotels. So they may call themselves a REIT, but they may just be the owners of La Quinta. And so that does change that then. They're just calling themselves a REIT, but if it's basically the owners of La Quinta, then, you know, you would play it like you play any other, you'd think about it like you think about any other hotel chain. Yeah, Jeff. I mean, yeah, I would definitely hold it because it's probably going to take some time for this one to work out, in my opinion, based off of what it did on Friday. Now it could just rock it out. Who knows? Tease plays do that, so I wouldn't doubt it for him. Jerome, I said this is going to be the last one, but Big Five. I'll do Big Five because I know Big Five. It didn't change. So Big Five had a monster run. Actually, I had played this on after earnings. Actually, it was this break here. I don't have it, but I played this on this. So I've played Big Five before. It's just sitting in the supply zone right now. It's got 50-day. It's got the 50-day support here, and basically, if you look at it, all of the major moving averages are converging. So 50, 100, 20, then you can ignore the 8 for now. 200's way down here, but like all the major moving averages outside of the 200 are all converged here. So what that usually tells you is it's just going to play this range. It's got to break out of them one way or the other. It's got the potential. I mean, you can see what it's done. You know, it's a regional sports company, or sports, like the regional big sporting goods. So, you know, it just depends on consumer appetite, really. So, but purely based on the chart, anything over 27, this is going to see 36, you know, really quickly. Anything beneath 24, beneath a 50-day, it's going to see 20, you know, roughly 20. So I have my eye on the stock a lot. I like it to the upside. And so that's my bias on it, is to the upside. But basically, until it hits 27 or until it dumps 24, it's just a wait and see. Oh shoot, sorry guys, I forgot I switched my screen. Hold up. So can you guys see it now? When you guys give me in the chat? Like Huey says, give me, all right, perfect. Thank you, sir. So, all right, so Big Five, basically, it's all the moving averages are, it's right on them. You know, it's holding the 50-day, which is the green one, right underneath the 20-day, which is this blue one, this orange one here. I don't know if you can see it that well, but that's the 100-day. You can ignore the 8 EMA, like I said earlier, and then the 20-day, or the 200-day, excuse me, is pretty well beneath it. So it's got to break one of these ways, you know, above 27, because that'll get it over the 20-day, beneath 24, because that'll get it beneath the 50-day. If it does any one of those things, you know, above 27, like I said, it's going to see 36 or so, 35 and a half, probably pretty quickly. Beneath 24, then we get back into, you know, right around 20. It's going to have some support here at 20 based off of this. And then more likely than not, the 200 day is going to be right at the 20 by the time it hits there. But then you've got this gap to fill here as well. Just notice this. So roughly 18, you know, so if it can breach the 200 day, it'll probably touch 18, and then we'll see what it happens. So above 27, you get 36. Beneath 24, you get 20. That's kind of how I would play it. Like I said earlier, I'm definitely bullish on the stock just in general. So my bias is above 27. And if we just want to talk about Huey's risk reward, like he was saying earlier, I don't have the fancy trading view, but above 27 to 36, you know, that's 9 points, right? Your stop would still be beneath the 50-day. So 27 to, let's call it 23 and a half. That's what, 3.5 point stop. for a 9-point, for a 9-point run. So, that's roughly 3-1. Now, if you were bearish on it, 24-20, that's a 4-point gain with a roughly, you could probably just use anything above this candle. So 26, we'll just call it. So that's 2 points to 4 point, that's 2-1. Those are, in my book, those are two very, very actionable risk reward ratios. 2-1, anything over 2-1, is a good play to me. So in any case for this one, I believe you've got a pretty good play. But I don't see any more in the chat, and I am basically got to hop either way. But thank you guys for spending your Sunday evening with us. GoldRushGang.net, at GoldRushGang, or at GoldRush on Twitter if anybody's here that's not on the server. 2 free weeks. Come see what we're doing. We've got T-Money, the Algo, Huey, the Smooth Operator, and then me and S holding down the fort. So come give us a try. Guys that are with us, thank you for being with us, and we'll see you on the server. Everybody have a great Sunday night, and we'll have a great week.